Greetings, market rebels. Welcome to this week's macro measure. It's Sunday, July 16th, 2023, and it's a little before 11 a.m. here on the East Coast. I'm Wayne, my partner Ryan's working on our market outlook overview for the week, and we will get going with our trusty disclaimer, and then we will flash our trusty intellectual property rights notice. And then I'm going to flash the stream of consciousness for this week and just leave it up there for a few moments so that if anyone wants to do a screen cap, they can. And then we'll cover this point by point. I think I'll try to do something a little bit different, and we'll see if I get some comments in webinars or maybe Rebel Pit or maybe in the forums with respect to how well this showed up on video. But I think it's worth a shot to try to do this. So let me just reposition things briefly, and then we'll get into a better situation here. There it is, and then do this. And this should, I think this will scale down for me, and it will. Okay, so we've got that. And then I may grab a browser to get started with. So let's see if I can get that other browser rolling. There it is. Okay, so let's do that. And then we'll try to get through a lot of our points here. Let me share my number 4 screen. And this should show up, and I think it is. So going to try to mainly focus on the stream for us, but I thought maybe having something side by side with the chart here or there could help. So at least I'm set up to do that if I want to. Let's see if I can just give us a little bit more room to work with things. All right. So yeah, I think this is going to be tough, honestly, but I'll try it out anyway. I just think there's so much information that it's going to be tough, but let's go anyway, and then we'll see how it works out. The discussion will pretty much be the same. It just might be tough visually, but picking things up from last week, the most likely scenario was part of it was still they try to run them in the back half of July. There was still RSI divergence, which there still is. And we said that am I in the wrong slide? I thought I modified that. Okay, just bear with me. I think I am. Yeah, it didn't give me the right slide for some reason. Boy, struggling here. Sorry about that, everyone. Let's see if I can get this one to side. You know what? I'm just going to leave it up there. So we will we'll go here. So we'll go with this this view. I'm just going to leave this. I don't think it will give me a better view anyway. I don't really want it to be in. Boy, really giving me fits, as you can see. Yeah, it's going to be hard. I don't even know if this view will help. We'll see. I'm sorry about that. Anyway, most likely scenario we talked about, right? That they tried to run them in the back half of July with the sweet spot we've talked about, which I'll cover, and then we've got the RSI divergence to keep us respectful of risk. That was the way the prior weeks. And then we noted at the really right that the RSI divergences are still flashing, but we saw a reminder why it's tough to fight strong trends, right? Because which I'll cover. Let's do that right away. As a matter of fact, we talked about how we thought the best timing would be for them to crack the 20, have a little bit more of a pullback, see where that goes, and that would probably be here really in the early to mid part of the month because of how things usually finish fairly well. But you could see on Monday, I think you can all see that on Monday, the Qs threatened to do that, get below that light blue 20 SMA, but it just couldn't be done. And by the time they put a nice reversal candle together, they were back above the 10, 15, and 20 by the end of the day, by the end of that session on Monday. Then it was up and away, right, until they took profits on Friday. So just another, gargantuan run. It's been, really good trading period. I think ever since we broke out in the second half of the second quarter, when we broke out of the the consolidation that kind of persisted in the SPYs and Qs to a great extent. It's been a great run, right? And so we've had a lot of good activity in UOA. We've had a lot of good activity overall in the momentum-based services, and in some of the premium collection services, you had to modify your position more if your position's a lot lately, and that's just what happens, right? When you shift from phase to phase. But very similar in the SPYs, right? Where, come on, you get the touch of the 20 there in light blue, and we thought, right, this would be the best chance, but they reverse it, pretty much close very close to the highs for the day, and then it's up and away. So the only thing I would mention here while we're still on this chart is just that at this point, you could, and this is in the bullets, right, the stream, there's plenty of room, in my opinion, given the channel that we seem to be working within, to keep going. There's a lot more upside potentially. But I do think that it's gotten a little overbought in the short term on some of your bigger picture intraday charts. So something like a half day or a 4 hour, it's gotten a little toasty again. And the daily is still near a toasty level. And also the weeklies are working their way up to toasty. So you can still trade the bull side, and I would enthusiastically do that when the opportunities seem to be there. It's just that, right, just know that if they start to get another day or two that's a little upside crazy, then you're really going to be in overbought territory. So you've got to, I think at that point, it all becomes about how you adjust your position management game, right? And that would, to me, would be, I'm a more aggressive roller. I trim, here and there a little more than normal. I roll a little more aggressively than normal. And then if there's really a strong burst, I definitely overroll if I want to stay in, right? I'm going to slightly out of the money calls rather than riding in the monies or slightly in the money calls, or the ATM, whatever your preference is. But that's what I would sort of add in here at the moment. So let's go back to our view. That is not our view. Let's go back to this view here. And I will cover some of the other points, and the other browser window I need, I think, is here. So this just covers, right, that there's target rates are still likely to go higher. And we talk about this almost week in, week out. We also have the situation where you're by December, right, you're looking at going higher by 0.25 or higher, right? That's more of the, at least go up by that much or more. That's 70% chance, roughly speaking. So that's where things are. And to me, again, that's rates staying for the next 5 months, staying higher for longer. And to me, that's a big problem, but it doesn't matter right now, right? I just feel like overall that's a big problem. Let's see. I'm still wondering about let's cover this. So I covered this I'll just enlarge this a little bit. Hopefully it'll let me extend this, but I covered this a little bit with Ryan on cocktail hour, right? And so this is what we look at quite often, just to give you an idea on how kind of frothy things have become. And you can see that after really smoking, right, the percent of stocks above their 20, they came roaring back. This is why it's kind of a little tricky right now, because a lot of things are saying, yes, you're getting up there, but are you really super overdone yet? And you're really not super overdone, but you are approaching kind of in historically quite high levels. Now, there's no requirement, right, that the market gets even more frothy. It could start correcting from here. I don't think a big correction starts here without a news driver that shifts things. But again, you never know, right? So that's that. Let's take a look at the number of stocks above I should say percent of stocks above their 50. And this one also, again, you can see the improvement right there, but you can go back and you see that you're really not super toasty here. Now, this to me is an anomaly, that post-COVID time, when the Fed and the government started coming in with, their usual trillions of dollars of support, only much more. So I don't know if you get that again very soon. Maybe you do, for all I know, but that's sort of a rare thing where nearly half of your GDP is essentially is put something akin to half of your GDP number is put to work to support things. It seems to me completely otherworldly. I don't recall, maybe during the world wars or something, there may have been something like that. But other than that, I don't know of another time where that much was thrown at the economy. Maybe that has a lot to do with the housing market, pricing insanity, and inflation, but that's a whole nother topic. And you can see the percentage stocks above the 200, quite a ways to go, quite a bunch of room if they want it, even by more normal standards, right? So you're not really there yet. You have room if the gang wants to keep goosing this thing, they can, and it wouldn't be crazy, right? Even though you're in extreme greed, you're not in extreme greed in the 90s, which I have seen. It's been a while, but I have seen that. So you're there, you continue to linger in the higher ends of things. You can see that if you go back for over the course of the last year, right, you can see that you're definitely up there, but are you really extreme where you have to feel like you should be panicking? I don't think so, but again, you have to keep that in mind, in the back of your mind, that, hey, I know where I am. I know that I'm generally a little toasty here. So this is just our recent weekly reminder that you could see what happens in terms of how options will likely become, if you follow the VIX seasonality, options are likely to become more pricey, right, as the year wears on. And also the VIX, of course, remains at a very subdued level. We do take a look at this. This is not really a short-term timing tool, but it's just a general kind of overall assessment, just to get an idea on, hey, where are things? And for the 6th week in a row, right after things finally switched from overly bearish to bullish, for the 6th week in a row, you can see that the optimism's above average. It did, however, back off significantly. So maybe some folks said, geez, this is starting to get a little bit crazy here. I'm going to go more into a neutral mindset. The neutral had quite a jump from week to week. So just something to keep in mind. Again, it kind of tells us, in my opinion, you're not super overbought. You have more room if you want it. But oh yeah, this is our presidential election cycle reminder for folks that have never seen the vids before, or maybe haven't watched them in a while. But regardless, right, this is it. We're getting towards, right, that part of the year, not exactly but this is your 3rd year of the presidential election cycle. And so you can see that this is the best year by far, nearly double the next best year, which is the year to come for us. And you can see that you have this powerful run, which you've had. Typically, it's been, of course, even more dramatic, I'd say, than when you typically see by a large factor. But then you do have some corrective activity, but that corrective activity runs its course. You come into finish the year strongly, and then the gang just keeps goosing into the spring, correct in the spring, and then you have another general leap into the final part of the year. So just keep that in mind. And this one here, yeah, I'm not sure why I had that one up there, so we don't need that one. So that's kind of a look at that. I can probably go a little bit bigger here and just kind of tick things off. So, right, I still wonder about the breadth, because I'm not so sure that what we've seen yet is legitimate. I know it seems like, well, what are you holding out for, right? I'm not really. I'm not looking to pick a fight. I mean, as I've said many times, despite my macro take on things, the armchair macro take, I would prefer that we really do have a strong economy and we somehow find a way. And things go well. I hope to be dead wrong about my macro concerns, but I still have them, so I've trust my instincts on that, because they've been right, ultimately been right, I should say, almost every time in terms of big macro changes and what kind of risk is out there. When it seems like almost everyone's saying, no, we're about to ramp through this, that, the other thing. People kind of forget. They want to kind of forget about risk quickly. I still think it's out there. I hope to be wrong. I hope it was all like overblown in my own mind. but I've been, Ryan and myself, I think we've been really good over the years, even before Ryan and I connected as partners. My take on things like the housing market, the market, ultimately, I think the concerns I had were demonstrated. It played out, but I didn't trade it that way, right? I didn't fight against the market. That's what we always preach here, is that you just got to keep going with the trend, even if you don't believe in it, right? You think it's kind of a lot of smoke and mirrors. Anyway, there's been that breadth jam. We talked about that. It did improve, but I'm still wondering if it's legitimate. I do think, right, that again, we talked about the VIX, still the case. The sleeper scenario we talked about for many, many, many months, right? That's still maybe barely alive, where you start to see this vicious move as we have seen, but that you then roll over and start to crack soon. I don't think I'm ready to put it to bed by the end of this week, because the market did go a little bit higher than this high, right? It did correct from there, and I thought maybe the sleeper still had a chance, double top, negative divergence. But this is the reminder as to why I always keep your counter trend trades on a short leash, because yeah, you think it's this big payoff time. They're going to come. People start thinking, oh, they're going to close the gap, things like that. And maybe they will in some scenarios, but right when they find support, it doesn't break. They turn things around quickly on counter trend traders when you're in a strong rally, which we have been. And that's why you've got to keep them on a short leash and really be disciplined with your defensive position management, right? And just say, or right, offensive in terms of capturing profits that are modest, saying, look, it was a decent little trade, nothing special, but I'd rather walk away from this as a winner. I can always get back in as a bear if this thing really cracks. That's all. So that's that, right? Now let's just keep going. And so the third presidential cycle is still clicking. We saw that there's chances there that we get the 93% chance that we go higher in really just 10 days, and then 70% chance that we're at least that high or higher by the end of the year. I'd take it back to DEFCON 3. As with last week, I still think there's room on the charts for upside. But in the ST, it could be choppy because we're overbought right now, mainly, right? Like a little bit overbought. You never know how certain earnings are going to impact the market. You've got the rebalancing everyone's talking about. So there's a lot of stuff going on. I think you really have to have your focus this week and next week, given what's about to impact the market. I still think, right, a lot of this is the gang anticipating or almost knowing, that there's going to be strong beats. At least they can position them that way, and their pals in the financial TV space will only be too happy to put on hats and blow whatever trumpets, whatever you want to call it, about how great everything is. I do think that a lot of this still is that people have basically front run and capitulated. A lot of bears have capitulated. We did see, according to one report I read, some of the highest short covering in over a decade on this recent pop. So that to me, again, is the panic to just buy because the pain became too great. And that's what we want to see if we're bears, right? If you want to shift to bear, you want to see a lot of that happen. And then finally, right, when the buying has all the short covering's been exhausted and it's not appealing to buy or add for bulls, then you finally get a chance, essentially, right? Like according to DeMark, when the last buyer has bought. So that's what we want to see, but obviously that has yet to happen. So that's the front running, right? The whole peaking argument, that fantasy's gone, right? But I do think that these companies have been able to pass the inflation on to Jane and John Q. And I think that could be boosting the short-term EPS prospects because people haven't fully adjusted to the madness of what we've seen in terms of inflation. Inflation is basically overstating everything, right? So even earnings, right? So earnings that come in at $2 only a few years ago, right? That they would have. The $2 beat now is probably about the same as the 160 number that came in a few years ago, but it's not really any improvement. but inflation being what it is, right? It kind of factors in that way, whatever the case may be. I still don't see great stuff out there. I don't think the international scene looks good still to me. China, Europe, that kind of thing. I think it's same as always, right? Same as it ever was. Good old David Byrne video. This is what they do. It doesn't matter. With the way that they've moved things back up, especially right in things like the semis, I don't know how some of that ever becomes justified, but we'll see, right? I've seen this before and been right in the long run, but again, in the short run, if you want to profit from the market, you've got to just trade that trend and that dominant momentum, and that has still been right on the bullish side. We can't rule out more of this. I still think they're extrapolating too much. Again, I don't see, right, when prices go, we should trade it that way. When prices go, you could say, well, that there's people that know things. You could see that you could say there's people that know things that we don't even know, right? I mean, sorry, there's people that know things that we won't even know for months and months because they're wired in what's going on in Mordor on the Potomac. They know what's going to happen, what's going to pass. I've heard that many times from people who were on the inside, that all this, it's all kabuki theater. It's almost all scripted kabuki theater in Washington. Of course, that doesn't surprise me because I've been around the markets for so long. I think the risk of being around the markets for so long is that you can never be cynical enough, right? So you always should be super cynical, and as much as you think you are, you're probably still not cynical enough. But I think there's major problems developing that are being masked, as they often and almost nearly always have been in my experience. I still think a lot of the other factors are there. I do think people are panicking that really thought, this doesn't make any sense. You're really at risk with this kind of performance of falling dramatically behind and then having to explain to people at this point at year's end why you're not in any of these things that were tremendous runners. So, oops, did it again. There you go. So some have been arguing that there would be like this liquidity shift. I don't see that. I don't see that yet. Like, I still think the liquidity is out there. I know that's been the talk about by some people. We covered it. Ryan's covered it, but I don't really think that's happened. I still think there's risk out there as there almost always is, but you got to appreciate where you are in terms of time and in terms of lofty levels. Yeah, we talked about that. And the banking system is off the radar, right? A lot of that has sort of fallen to the wayside, but I think that that's concerning. I still think there's big issues potentially in the banking system. From what I've continued to read, I am not going to give up on that. But again, we've been trading XLF, Morgan Stanley, and a couple of others. Goldman, we have a bullish idea. All these have had bullish ideas. So just saying that, we look at the charts and the UOA and the whole picture of what we think is happening, and we go with that, right? That's what we embrace to profit in the short run. So that's all hit on really down here. But so we'll try to make most. I think they'll try to make the most out of the sweet spot's twilight. You all know what the sweet spot is, right? That's really where we've been for the last probably 7 to 8 months. It's your best period within the presidential cycle, and it's about to come to a close, draw to a close. And so I think that's what they'll do. They'll do the best they can with it, and we'll see what happens, right? I still think there's a bunch of potential. All this stuff we've talked about, the sleeper scenario is very drowsy at this point, but it's about to get put to sleep because you're just not getting. You had your chance last week with it, I think, but when the 20 could not be cracked, that was basically all but a formality now that the sleeper scenario I had in mind is not going to play out. I'm really still seeing the extreme. I think you're at DEFCON 3, right? I think I'd back it off because you're so far away from your 20 SMA at this point, which to me is very close to my support line. And, if I were entering a trade at my support line, I'd be concerned about that support line because I'd say, oh man, the 20's right there. There's slightly lower lows right below there. There's a flat line right there near 437. I've seen activity there. It wouldn't be the best trigger here. Now, in the very short term, sure, you could take a little trade there, but I would still not feel like anything's really big is cracking until you are breaking below 437 at the very least. So for more, more downside that maybe brings you into the 50 or something. So I think it's just the way it lays out right now, right? There's nothing we can do about it. And let's see. So I think things could escalate, right? But I still quickly, because we have had such a run, I don't expect that to be the case. But I would say, if you get in proximity to the 20 SMAs and the Qs and the SPYs, that's when I would really raise my DEFCON level to start definitely playing more defense or getting ready to go on offense as a bear. Remember, still counter trend though, right? News drivers appear, maybe. I mean, that's something we can't really predict, right? That there's certain things start to dominate the news cycle that change things, but I don't think that's the case. And I do think, and this is stating the obvious, but we may as well cover it, right? That EPS reactions are likely to dominate the close of the sweet spot window that's rapidly approaching, as I've been noting. So I think that's it for that. Let's see if I can just get the one thing that was left there, and that is not it. One thing, and then we'll just get into the charts. I think I might have dumped. That third year sweet spot. I'll get that back again, but basically, it's this really strong run. You could see from late last year through the middle part of the year by a little bit this year. That is your longest and strongest run that you get over the course of the presidential election cycle. That is basically your sweet spot. Again, it's coming to an end. I'm not going to quibble over what day or even week that it's ending, because I really don't haven't memorized when all the EPS reactions are going to hit exactly. But I do know in the next 3 to 4 weeks is really, it'll intensify dramatically starting pretty soon. And we all kind of know that. So let's get back to really the charts at this point. We covered a lot of that stuff. Here's why I'm saying that I think there's more room, right? Because if you look at the channel we're operating in, it's a little bit of a widening channel, but you can see that if we just think we stay between this, and you often do, right? When it's funny, because when you look back on chart action, you can see that so many channels, you can draw channels on virtually everything, but it's not easy right in the moment to say, hey, I'm definitely here, there, everywhere within the channel. But it definitely has that kind of final, I mean, look at this kind of madness right there, right? That now could the SPY do that if they get a series of earnings beats? Could that we have another period like this where you just go nearly vertical, right? This happens at times. And it tends to happen right before things top out, and it also tends to happen at a great selling opportunity when the trend has changed, exactly like we see here. So that is a possibility that I don't think you can rule out. So I wouldn't, again, that's why I'm at DEFCON 3, and that's why I'm still respecting things. And remember, right, in the spiders here, we did now get back to the 78.6% retracement level, another kind of fib level that's not really a popular one in terms of discussion all the time, but it is something that some people would like to keep on their charts. So from the highest high of all time to that corrective low, 80% nearly of those losses have been regained. It's been really a remarkable opportunity, right? I think it's not easy, right? If you want to stay in bear market mode, clearly it's been very difficult, but I do think that, right, it's had a ton of opportunity for what may yet still be a counter trend rally, right? Counter to a bigger picture trend. I don't know. I really don't know. I mean, I don't, this is one reason, right? I don't know what just happened. I'd rather have that mental flexibility. I don't know what happened here with Thinkorswim. It looks like it didn't save I had a quarterly, kind of frustrates me a little bit because I had a quarterly on there and it just dumped it for some reason. Let's see if I can do quarter. Let's see, time interval, max available, add. I don't know why that it did that to me, but it's not there. Apply, okay. But it's really, and even it's going to compress things a lot, but you can see, right, just kind of what's going on. So you just can't even rule out, right, a run to the all-time high at this point. I don't think you can rule that out. It's if it just, you got this, maybe this great earnings situation, maybe. So people would say, well, what do you mean? You really think we're going to go up another 30 points here? Another 6%? You got to be kidding me. I understand that perspective, but yeah, as a chartist, I mean, I can't rule that out. I mean, if you look at the really big picture, could you have a lower high? Sure, you could. But right, remember, half of the month is here, and they're still treating things very well. Things are still behaving very well. Now, it might be for incredibly dubious reasons. I wouldn't argue that for a minute, even not even really seconds, but in some ways. But if you look at it, it's pretty hard to say, right, that with all that they've been able to do so far, that they can't do more. So I'm looking at it like that. Here's a monthly chart. This is something we don't do all that often, but it might be worth a look. And if I look at it, I can see that on a monthly basis, I'm not even that overbought on RSI, right? Look over here for your RSI reading down. Where is it? Where's my RSI? There it is, in the middle one. If I mouse over that, right, that RSI is going to be 50, or rounded off to 60. So you can't tell me, right, that there's no more room to the upside. Maybe there won't be, but it's the fact remains that if you're objective about this, there's room if they want it. And do they have, right, the right stuff between the AI mania that could be discussed on conference calls, the resilience that you'll hear about, all these things, the liquidity's still there, the fact that inflation is being passed on at least for another quarter, that a lot of the cracks are still being ignored, but that could really be a problem down the road, right? Just think about all this, all these things, right? So I wouldn't rule out more. I do think, obviously, we are short. This is the problem at the moment, is that we are short-term overbought. If I look at the weekly, you're at 68 on the RSI. If I look at the daily, you're at 70 on the RSI. So these are not levels that I immediately start picking a fight. I'm just putting it in perspective, right? That's what I think I try to do. And then it always comes back to taking action and then managing, right, whatever action you've taken. And that's the real basics of trading, right? So you can take a counter trend trade here, but you have to not get smoked if the jam job just continues. And that would be, you get a little bit of a pullback, they don't let it go. Maybe you get they don't let it go fully. You're happy to take a single or a double. It's countered to a very strong trend. Maybe this may be a counter trend overall, but it's still a very strong counter trend. We just don't know. And you can't even rule out making new all-time highs, right? Because if you're in a mania and there's liquidity, which I still think there appears to be, despite all the concerns about liquidity being removed, we have to mention, right, what's out there, but I don't see any of it yet. I see a lot of negative things impacting later on. I think rates going up even further and remaining there even longer is going to really throttle things. And I think things are beginning to throttle. They're just being ignored. And that's what I've always seen in my time in the markets. So nothing's new about any of that, to me, at least, and the way that I view things. So let's take a look at the Qs. It's going to be a very similar story, only, maybe a little bit better, because the Qs, and you'll see I added the fib for us in here, and we've got even more than the 78.6% retracement, right? And you can pick out whatever you want, but here's, you're beyond 78.6. Here's the upper end of the channel. If it just jammed up right away, that would be about 393. right? So right there is what, 14 points, which is another 4 to 5%. And if it takes a little while to do it, even more. You might get towards 400. Now, where's the all-time high? Let's find that on the weekly easily. That's not very far away, is it? Right, at 408.71. And so can you rule out that this thing tries to attack the all-time high and maybe even exceed it? And that really convinced, that's kind of like that secondary sleeper where they just were able to dispatch this like it was nothing, and then even make it appear as though a breakout was happening. I mean, if this was going to cause capitulation, which I think it did, right, to some degree, what's going to happen there in terms of capitulation when the highs are exceeded, if they are? So these are some of the things I'm thinking about, and I just know where we are. You know, like right now, to me, it's you're getting there, and I can't rule out even more upside. So in the short run, again, I've never really accused bulls of being smart. I think they are what they are, and I think it's very easy to throw other people's money into long stocks and then just say, well, you know, the market has corrections and all that kind of stuff that a lot of the Wall Street talking heads will come at you with. Don't like the candle. We didn't like the candle of the prior week. What did that really do? It gave us the Monday weakness and a reversal back above to right virgin unchanged close practically. We didn't like the candle in the spiders, and the same thing happened, right? So that's why you can think about a breakdown, but if you don't get it, it's not like there's nothing that's stopping you when your entry attempt doesn't work, right? And you are getting back. There's no shame in taking a small loss and just getting yourself positioned to trade the same thing in the same way again, or being ready to go the other way, saying like, okay, even though I was a bear here, let me objectively step back on that vertical line and say, look, at the close of that day, these guys have successfully defended support again. Okay. And so I'm going to wait and see. Now, the next day, did they exceed the low of Monday? No. Do you want to fight against something that has recently corrected for 3 or 4 days, found support and reverse in a strong trend with earnings coming up? You know, that's what you got to, I know, like it seems easy, but I'm just saying, I know it's not easy. I'm just saying these are some of the step back and think about it things that I would have as like a checklist, like answer questions if you're new to a lot of these things, because you know, if as we said, we thought that early part of last week would be their best time to crack. They didn't crack. And then the earnings towards the end of the week, we thought they could use to goose, and they did. Between the some of the data that came out and the EPS, they were able to goose into the end of the week, which was kind of like our scenario was kind of right. The only missing ingredient to the early correction, and I thought there could be a little more, was that it just didn't correct more, or we just couldn't get the cracking, right? That was the missing element, which that's always the missing element. Couldn't crack there, right? They couldn't, they threatened to crack here and they reversed it on you there. This is what the gang does, right? This is exactly what they do. There's a lot of people that watch these things. That's why we watch them. Frankly, I'm not a big fan. If you ask me, you know, well, hey, what would you really use as a moving average to do this, that, or the other? I certainly wouldn't use the 20 period simple SMA in terms of, hey, yeah, this is my best technology, right, that I can develop with respect to moving average concepts. But it remains super important because so many people follow it, right? I think that is part of the self-fulfilling prophecy that some people will level at technical analysis. But as I always say, look, if that's how it works, or it seems to be working consistently that way, what are we supposed to do? Ignore that, right? You got to really just go with the flow. Again, you're not the market. Market's much bigger than the average trader, Jane or Joe, there trying to trade. So you've got to just realize that, right? You're the guppy, you're the minnow in this whole scheme, unless you're running something massive like, I don't know, Medallion or whatever one of them. But there you have it. I mean, I think that's really the message here, that you are in a tough spot in terms of, should you pull back a little bit in the early part of the week? I think you should. Will it turn into something big? I don't think it will turn into something big until they crack the 20. Did the IWM break out? Yeah, it did. Right, here's your resistance. Will it likely come back and touch right that flat line that I've got up there near let's say 188 and change, or maybe the 10-day there in white at 188.27, whatever, maybe even further. Will it do that? It looks like it could. Should it? I mean, if I'm a bull, I even want that to happen because it's a nice long run. I broke out. I love to come back, touch support, and go again. And that would only be more encouragement, right? Is the RSI up there? Yeah, it's 60 something, but did it correct from a much higher level on Thursday? It did. It was at 67.41, right? So it's not as overbought as the other ones. If I'm a bull, I want to see this thing pull back to the support level we put in there, or the 20-day hold and go. That's what I want, because I really like healthy starts to rallies. I know people love strong, impulsive type movement where you just bat out of hellet, and so do I. But in terms of sustainability, where you don't have as sharp pullbacks later during the run, I'd rather break out, come back, and go. A lot of people are like that. I'm not unique in that, but it's a popular thing. But I've seen that be sort of, in my mind, at least a little bit safer to trade on the long side once the trend resumption starts all over again. So that's that. And the diamonds, we'll cover those because we always do. They're lagging, right? But this to me is telling you that, look, this has potential, right? These are far behind. They're far behind in terms of the breakout that the spiders and the Qs have just enjoyed. So some of the names in there could be worth a look for that reason, right? You got a really long, at this point, it's a really long kind of consolidation basing formation. And this big move up here has resulted in, right, sideways-ish action, consolidation. And that, to me, taking a 25-point run, again, that's a heck of a move. But I do think you should keep your eyes on that. I just brought us the weekly to get perspective. This is not overbought, as you would expect, because it hasn't ran, right? So this one, to me, I would look at some of those components. That would be my sort of greengrocer tip for the week. If you want to see where the gang could start rotating to, they might say, hey, there's some really great blue chips out there that really look attractive to me right now, that kind of stuff. So just get ready for that. If the rally continues, and probably should wrap up on a couple of the things we always check, but the dollar DXY we'll use like we typically do, right? This was one of the bigger smokings that we've seen in a while, right? You have to go back to this smoking there. Well, why is it doing that to me? You got to go back to that smoking right there in Nov of 22 to get, I think, a candle quite as ugly on the downside as this one. Now, this one, of course, it shows it going even lower, maybe needing to come in even further to be able to find a bigger picture support. But that just got roasted, and that helped. I think that really helped stocks. The dollar getting roasted. Then also the TNX, which threatened to start maybe going back and attacking the highs, was probably overdone, right? That was at 68 on the RSI, even on a closing basis, even after reversing. So it was probably right near 70-ish, which again, I'm not a stickler for that, but I'm just saying that on this daily, that retreated hard, right? So rates came off hard in the face of the 10-year yield came off hard in the face of rates going higher, according to the probabilities we're looking at. And then your VIX, of course, it just didn't have a good week, right? I mean, that's been a recurring theme. The VIX getting really reversed hard and just worked right back down towards some of the lowest lows we've seen in years. We've got to go back to see that. This should give it to us right here. We kind of get us to that 1273. And you could see that you got to go back to early 2020, which is COVID was there, but the market was ignoring it in early 2020. I'll never forget that because Ryan and I were able to really convey that and how much risk we thought there was. And that worked out great in Phoenix portfolio and helped people avoid getting crushed, and that's what all the time that we put in doing the reading and all that stuff, that's where it pays off for you, that you appreciate the risk that's lurking out there, that in scenarios that could transpire so that you do not get caught off guard. That's always been my argument for why it's, even though the fundamentals and the macro econ, all these things do not seem to matter in the short run, they matter in the sense that, in my mind, that that there's a lot of looming risk that could impact the market and that you shouldn't be blindsided by that. So that's that. And the final thing I think I want to show for this is what I've been calling like my dots. Where are my dots at? Is this my dots? Nope. Bad guesses. You can see that and I don't, it'll help me to get away from the VIX. So you can see that I just run too much. I've just got so many things that I work on. And so at night, the weekends, and nope, none of that matters either, dummy. But I don't, is this it? Nope, that is also not it. I could have sworn I moved my dots over. Maybe they're at the top and I'm jumping. Yep, they're at the top and I'm jumping right past them. Okay, so here are the dots, and you can see that I magnified the dot aspect. And all I wanted to show is that where we are, and I think I might even give us like, no, you know what? This is a lot of data. That's probably 10 years of daily data, I think, or at least, well, 5 years. But going back the last 5 years, you could see that this is what I referred to as the percent stretch from the 200 SMA. And so the spiders are very stretched from their 200 SMA at this point. If you go back and look at the last 5 years, right, this is compared to mostly every time but here, right, that's in early 18. That is probably more normal times, okay, versus these where it's even further stretched. And I say that because, again, this was the post-COVID era where our so-called leaders were dumping trillions of dollars into the economy, into whatever you want to call it, fiscally, the Fed, all the support that came in, utter madness. But their policies just bring about utter madness. That's what my take on it. But if you say, well, this is really kind of an anomaly, let's be honest, you don't expect to see that very often. That might be once in a multi-decade, or maybe even once in a so-called mature Western democracy. That's should be something that you don't see that much of that at all. But you did. But if you get rid of that anomaly, right, then you're really up there still. You only have one other period that's just a little bit worse. So you're very stretched. And if you come back to a more reasonable view of things, if you come back to a more reasonable view of things, let's just kind of see where the dots got crazy. So the dots got crazy there during a normal period. That is right in front of a very significant correction. Okay. And then you also have these periods right here where the dots were also up there. And you can see that's just in front of that major correction, right? That was the whole COVID experience. So all I'm saying is, again, appreciate where you are, right? And nothing again would make me look at, this is the early stages of the kind of intervention, but here's the latter stages of it. And you can see when you get up there late in something, it's not good, right? It tends to not be good in the times that follow. So I think that's what you got to keep in mind, that, things are becoming riskier and riskier because the lunatic fringe that runs Wall Street has really made things exceptionally stretched. and front run a lot. And they might have priced too much good stuff in too quickly. I know that many longtime market observers will be shocked by that comment. Of course, I'm kidding, but you get the idea. So you can't, this is why it's so tough, right? At this point, you can't rule out more. You just can't, not with these earnings looming. You're short-term overbought, and you're getting into between sentiment, between percent of stocks, all the things we've looked at, you're getting into more and more dangerous territory, but you're not done yet. And you're not, in my opinion, with absent a real news change, you're not at risk of cracking, right? Which is why I'm taking the DEFCON back. You've got to, in my mind, you've got to crack that 20 right now at the very least. You've got to crack the 20 to really say, oh, this thing's in trouble in a big way. Then you've got to crack that 436 and change. Then you've got to crack about 432-ish to really, really get cracked. And then that'll bring you to the 50. That doesn't hold, you might get a gap fill. But again, I think it would take something that I'm not expecting. And I don't think these earnings are going to be that poor. In my gut instincts are saying they're not that poor. So I don't think that this is going to be that bad. That something would cause that. That doesn't really mean we should rule out geopolitical or major macro developments. Other sort of black swan, gray swan, whatever the case may be, that kind of stuff. That's always there, though. You just never know. But I think normal kind of news environment, normal kind of earnings, earnings reactions. I don't see this getting reversed. There could definitely be a sell-on news factor, though. If you've had a strong run in a stock, I mean, there's been some incredible runs in stocks. If you've had that, and then you're in there and you decide you're going to stay in for earnings with a lottery ticket, however you, and you get that payoff, right? First order of business, capture. You want to roll to stay in, fine. But number one, capture the profits. Two, then get in quickly with whatever you plan to do. That's how I handle it. But what I would say is there's a decent chance after some of the runs we've seen that they will have if they have great results, they may gap that stock up, but they could then reverse them hard in a massive sell on news type of reversal. So just keep those things in mind. It's been a really good trading market, and let's just do our best as it gets a little tougher. Remember that in many cases, second half of August into early September is listless, and they say never short a dull market, and that's probably a pretty good advice. But what I would say to that is, August can be really dull. And it's also a time where I've seen some profit taking after earnings in the second quarter earnings. So and the sweet spot ends, and the presidential cycle starts having a little bit of shaky performance here for the next couple of months, right? And rates are set to head higher. So keep all that in mind, because I think, right, you really are at the twilight of the sweet spot over the next few weeks. And at that point, even if you go post-Fed and everything's all celebratory and all that kind of stuff, I think that's when the real risk starts to creep in. If we make it that far, and we haven't, had some reason to drop beforehand. But I still think, if you're going to become a bear in the short run, just be a very disciplined, crafty bear that doesn't allow themselves to overstay their welcome. Okay, if you really don't like this market for whatever reason, but I think it's very tough to fight against this market. We've had a couple of bearish trades that worked out there's been way more bull trades than bear trades in UOA Pro. And we've had a couple of the bears actually work out, but they are not windfalls. They are nice little, maybe singles and maybe a double. Maybe you stretched what should have been a single into a double because you had a lazy outfielder, right? Something like that. But it's not been easy on the bear side. Just hasn't, right? And I need to see more deterioration and some threat of cracking real support, before I'm ready to pick a big fight with this situation that we've got ourselves in right now. So on that note, I'm going to wrap up. I'm going to thank everyone for tuning in. And I do hope that something I shared with you this week will help you out this week, or maybe some week in the future. And I'll be in touch, of course, through all the ideas I generate in the OA Pro, and all of our webinars, potentially, whatever forum questions we have, our next cocktail hour. You get the idea. So everyone, stay nimble out there, be respectful of risk, and you do that, and you'll be fine if this market keeps rocking and rolling. Everyone, take care, and thanks again.